All right, Ron Insana, welcome. Good to have you with us.
Thank you.
You think inflation is peaking and about to cool dramatically. Why do you say that, and how do you filter what Esther George and Waller say to the contrary?
Well, one, I think there's an extraordinary popular delusion, Tyler, that we have entrenched inflation. I mean, if you look at every metric at the moment, and it's possible next week we will see a negative CPI print, given the big drop that we've seen in gasoline prices over the last 87 days, and decline in other commodity prices as well. Rents might be the only area that are continuing to go up. But we've already seen the peak in inflation, as far as I'm concerned. And you know, listen, we've talked about this a lot. I've been saying it for quite some time, but I do think these clarion calls of inflation staying elevated, of the Fed needing to keep rates well above 4 or even 5%, as the supply chain is normalizing very rapidly, with shipping rates coming down, lag times and deliveries falling, prices in a wide variety of areas, even including residential real estate, are falling sharply. I think this is a wild misread on the type of environment which we find ourselves today.
Oh, okay, well, I'm reading through the op-ed that's on CNBC.com, and you've got the gasoline prices are down for 87 days in a row, quoting information coming to us from AAA, that commodity prices are sliding here, that the prices paid component of the most recent ISM manufacturing report dropped. Okay, so you're saying that. Don't you think that these Fed vice chair are looking at this same information? What are you seeing, Ron, that they're not seeing?
Well, I don't think they're taking into account that this is effectively real world data. They had said early on in this process of raising interest rates that they wanted to see real data, not just indicators or expectations of inflation falling. And we're getting very hard data. When you look at the charts of shipping costs from China, they have fallen precipitously almost all the way back to pre-pandemic levels. The same with lag times. Inventories of accumulated retail goods, as we discussed in the last couple of weeks, are building. Auto production, vehicle production is back to pre-pandemic levels. The supply chain is righting itself. And I think with the exception of labor markets and the physical availability of housing, even though housing is in a recession, we're seeing all those inflationary pressures that the Fed thinks may be entrenched actually being ameliorated quite quickly, far faster, I think, than anyone had thought. So I really think they're just misreading the tea leaves here, and they're ignoring hard data amid expectations that somehow the consumer believes this inflation to be permanently entrenched like the 70s and 80s. I don't see any evidence of that.
Okay, you're also pointing to what's happening in China as being a real global recessionary risk. Here's my question. Yep. If you look at what happened in the United States and other countries coming out of pandemic lockdowns, there was an explosion in pent-up demand. If we see China either loosening its zero COVID infections policy or getting past it, past it, what then happens to inflation around the world?
Well, look, their property market, Contessa, is imploding. We're seeing some serious and potential systemic risks in Chinese property values, in the government and bank-backed guarantees of property developments that have been pre-sold but are not necessarily going to come to fruition. They have outright deflation, and the volume of global trade has fallen rather precipitously as the Fed and other central banks have already tightened. And so I don't think China is in a position to export inflation anytime soon, nor is Europe, which is facing the dual threat of an energy crisis and a deepening recession simultaneously. So I don't see where exported inflation will come from, particularly with the dollar as strong as it is, which in and of itself may create the type of problem overseas that the Fed will have to respond to down the road. So I think all the signs are pointing in the direction of falling rather than rising inflation, and we'll get more and more data on that over the next couple months.